Hello everyone, in this video we will talk about the general concept of the average strategy and show some examples of how it works. The idea is to create an algorithm that picks up the short-term trend change that goes against the long-term trend, which allows us to benefit from a short period of time when the market predictably undergoes a correction. The averages algorithm can be used on one particular pair or to prepare an algorithm for a pair that does not yet exist but will soon be listed on the exchange. Averages group works on the same principle but on many markets. Let's look at the averages group. Info allows you to add a description to identify your algorithm in a full list of algorithms. AutoStart allows you to select whether the algorithm will start automatically after the core is started. Open Graph on Trigger opens the graph on which the algorithm has placed orders after the algorithm's conditions are triggered. Auto Restart allows the user to decide whether to allow the algorithm logic to run automatically if the previously placed order has been executed, thus placing a new order. Restart Delay sets the delay in seconds. The algorithm will place a new order after specified number of seconds after the execution of the previous order. Do Not Trigger Effective does not allow the algorithm to place orders if there is an open position. Max Active Markets will limit the number of markets on which the orders will be placed using the averages algorithm to this number. Now let's look at filters. Exchange type allows us to choose from currently supported exchanges, currently only Binance. Market type allows us to choose market type, spot, margin, futures or delivery market. Quota sets allows us to choose a quoted market type. If you, for example, want to trade the whole market in relation to Tether, then enter USDT in this field and press enter. Whitelist allows us to use a specific list of pairs in a specific market. After entering the pairs, press enter. Blacklist allows us to exclude certain pairs from trading on the specific market. Delta check frequency is the frequency of filter checking for delta matching, measured in seconds. Coin delta filter is an option which allows you to set minimum and maximum delta. If the volatility of the selected pairs is higher or lower than the value set in the time frame, the algorithm will not work and the orders will not be placed. Use relative delta allows you to use positive or negative delta. If you want to use positive delta, the values in the range field must be positive, and for negative delta, the values must be negative. You have to specify the value from lower to higher. Coin quota set max volume filter allows you to set the minimum and maximum volume of trades at certain pairs in 24 hours. If the volume will be less or more than the set values, the algorithm will not work and orders will be cancelled. Bitcoin delta filter works similarly to the coin delta filter, but only on Bitcoin. It is needed to enter or exit trades when Bitcoin price changes, as most coins follow its movements. Relative deltas are the same as on other coins. Now let's look at the parameters of the algorithm. Long period defines the long period of time which will be used by the algorithm to compare prices. Short period defines the short time frame in seconds for price comparison. Trigger distance sets the value in percent of the mismatch between long and short time frame, which will trigger an order placement. Can be either positive or negative values. Order price distance sets the distance from the current price for the order which will be placed by the algorithm. Let's have a look at the order parameters. Side allows us to decide whether the algorithm will place a buy order or a sell order. Client order type allows us to select the type of order to be used by the algorithm. Stop price establishes a certain distance to the price level at which the stop limit order is placed, which initiates the placement of a limit order. Order size, the size of your order in Tether. Max position size will limit the number of orders you can place if the position size reaches this value. Cancel delay, the time in seconds before the unexecuted orders placed by the algorithm will be cancelled. Cancel on first fill cancels all orders when the first order is filled. Multi-order allows us to place more than one order on one pair. The function can be enabled or disabled. Orders is relative to sets if the size of orders placed by multi-order function will increase relative to the initial order or relative to each previous order. Count says the number of orders placed. Distance says the distance between each of several orders. Size increase says the order size increase between the orders set by the algorithm. Auto join take profit stop loss sets whether the take profit stop loss orders opened by the algorithm are to be joined together after the cancel delay or not. Join on first fill joins all current take profit stop loss orders connected with the current position after the first order execution. Take profit percentage says the distance to take profit from the price at which the order has been executed. Order type allows you to choose the order type which will be take profit when a position is opened. Auto price down. Timer says the time in seconds which take profit will wait before approaching the current price for the specified step. The same value will be used for the first step as well as for the following steps. Step says the percentage value of a step down relative to the initial price. Limit says the smallest limit to which take profit will be decreased in percents. Now let's look at the stop loss order parameters. Percentage says the distance in percents to the stop loss from the price at which the order was executed. Spread allows us to set the distance in percent from the current price, which will determine where the stop loss will be placed after the price crosses the stop trigger. Delay says the delay in seconds before placing a stop loss, often used when users are trying to reduce the negative effect of a very deep price movements. Order type allows you to choose the order type, which will be used to place a stop loss when the position opens. Trailing stop allows you to choose whether stop loss will follow the price or not. Spread says the percentage of price movement at which stop loss will follow the current price. Second stop loss allows you to replace the existing stop loss with a new one if specific conditions are met. Second stop loss trigger distance is the level at which the movement of the price in the profitable direction will delete the existing stop loss and place the new one at a distance equal to the second stop loss percentage from the level of the trigger distance for the second stop loss. Second stop loss trailing enables or disables trailing of the second stop loss. Now let's take a look at two algorithms. First in the left corner works against the trend. The second in the right corner is in the direction of the market. You can see the parameters of the algorithms on the screen. Let's analyze the first one. At this point, the parameters of the long and short period have been respected. Immediately, a sell order was opened and the second order was placed, earlier indicated in the multi-order parameter. After the price has reached the second order, both orders joined and the entry point has moved as well as our stop loss. At this point, the second stop loss triggered according to the specified parameters and our first stop loss was cancelled. As we have enabled trailing second stop, we started to follow the price and at this point we closed with a small profit. And now let's see what happened in the second example. We see the opening of an order by the trigger. Don't forget to set a stop limit order to place a buy order in the ask side. Here we see the deal closing, as in the previous example, by the second stop loss with trailing.